All right, so welcome back to another edition of how to really grow a small trading account. And again, we're focusing on strategies that you could use and that you should put into play that's going to help you grow your account. But not only grow it, but sustain it. And that's one of the keys. You know, there are people that come in and they get lucky and they hit a few good trades, they're following somebody, but then once the wheels come off, they have no spares. They don't have any way of getting back on track because they didn't know or didn't learn anything or didn't go about developing the right way. So it's key, and everything that we've talked about over the last couple of weeks is key in, you know, a new trader or even a trader that's been doing it for a while, but they haven't been profitable. You know, there's no reason that you can't stop and reinvent yourself. And sometimes that's what you have to do. I know that's what I had to do to get to where I am. I had to kind of reinvent myself. And I had to focus on the things that I needed to help get me to where I wanted to be. So last week, we talked about the anatomy of a trade, how we find the stocks that we trade, how we develop a plan and the execution, and then when you finish the trade, and then you use the reflection part, you know, where you journal or you do a video blog or however you do it, you know, so that you can go look at each trade and analyze it and figure out what happened. And if it was something good, you want to figure out, well, how can I continue to do this? If it was bad, you want to figure out how you can eliminate it. So all of this, it is all part of a trade. It's just not entering and exiting. You know, there's all of this fits together to make a trade. So what we're going to talk about today is managing your moves. And managing your moves is going to be key, especially when you're trading small. When you're trading small size, if you're trading 100 to 300 shares and the stocks that you have on your watch list are only giving you 10 or 20 cent opportunities, then it makes no sense. You're not going to make any money. You may win on the trade, but you may lose. The commissions may cost more than what you made on the trade. So it's imperative that we're able to not only pick the right stock, but we're able to manage our moves. And it's important that we don't let other people manage them for us. Is that we take ownership of what we're doing and we manage it. We don't take a trade just because somebody else is taking a trade, and they usually post winners. So if they're taking it, I'm going to take it. And you don't want to get into that groove. Now, when you're first learning and you're trying to understand what people are doing, you know, that's fine. But you're going to get to a point to where you're ready to start being consistent. You're ready to make money trading. And you can't do that with somebody else pulling your strings. It doesn't work that way. So this is what we're going to talk about today. And it won't be that long because, I've got to go do something very sad. But it's part of life. So I can't, make this too long today. So here's some typical newbie questions. When you come into trading, you want to know, how can I control the market? How do I beat the market? Or how can I predict what the market is going to do? Now, how many of us got caught up in today trying to figure out where the market's going? Or what's this stock going to do? Or what's that stock going to do? We get caught up in trying to figure all of this stuff out, when actually, we really don't need to worry about that. We have our strategy, we have our rules, and we just stick to them. And if we manage our moves, if we're able to manage our moves, then how we can control the market, how do we beat the market, how can we predict the market, all of that comes if you master your moves. Because what you're doing is you're controlling what's happening. Even though the market, you can't directly control the market. You can't make the market go up or down. You can't make the stock that you're trading go up or down. We don't have that kind of, size behind us. So we have to trade what we see. And we can't go by what other people are saying or other people are doing. It's just like when we see the news and we think that news is bad, and the stock goes up, but the news is bad, the stock goes up, and we're trying to figure out, well, why is the stock going up, when really all we needed to do is look at the chart, look at the board. If you're playing a board game, you can analyze, you can connect this to playing chess. When you're playing chess, you're looking at the board and you're basing your moves. You're not only looking for the first move, but you're looking for moves down the line. And you kind of do that in trading when you're planning your trade. You're not just looking at the entry. You're looking at what happens after the entry. You're looking at the next 2 or 3 moves. Provided you have a stop, and then you have your profit targets. So you're looking at more than just the next move. So those that just get in the trade and then let other people dictate whether they need to take it off or not, or they're listening to what somebody else is saying and they get scared and take the trade off, you're not going to get anywhere like that. So you have to think for yourself. You have to learn to make your moves and master the moves yourself, so that when your strategy triggers and it triggers an entry, you're not just entering a trade and then figuring out what's going to happen afterwards. All I want to do is get in, and then whatever happens, I can work around it. That's not the answer. And that's not the consistent way that you can, consistently make profits. You may get lucky and you may catch a big win here or a big win there, but it won't be consistent. And what we're doing is we're looking for consistency. Now, are we going to win all the time? No, we're not going to win all the time. I got the 2 trades I I tried today. I knew they weren't great setups, but I tried them anyway. But I stuck to my rules. One I had 60-cent profit on or something. I was looking for a bigger move, and I didn't take it and ended up getting stopped out. But I was in control of, what I was doing. I knew I did exactly what I had planned. And because of that, I didn't feel like I was out of control. I didn't get upset. I didn't, blame the market or anything else like that. I knew what it was doing. I could look at it and tell. But we have to make sure that we master our moves, that we are the ones who's in control of managing our trade. We don't want to give that up. So if you do that, then you're going to have a very good chance of having a successful trade. Yep. And you guys, you read what Eric wrote, that's exactly what I'm talking about. You've got to tune out that noise, and you got to look at the board. Because, if you think about it, I don't know how many of you play chess, but when you were first learning chess, you were always reacting. You were in a position where you were just learning how the pieces move. You were learning a little strategy, but you were on the defensive. So all you were doing was you were reacting to your opponent's moves. But as you got better and you developed some skill and you learned more about what you were doing, you started dictating. You started managing your moves so that your opponent couldn't sit back and do everything that he wanted to do. And in trading, it's kind of the same way. Even though the market doesn't react to our moves, but we won't be behind the 8 ball reacting to everything we see here or anything like that. We're actually studying the chart, studying the price action, and we're making our moves based on what we see. And that's going to be key. The last thing I want to talk about, and it's something that is very important when you're planning your trades, especially when you're trading smaller size. I always recommend when you go live that you trade small size. And I'm showing you, yesterday I traded 100 to 300 shares on everything, and I made over $400 just trading that, and I stopped out twice. And you can do it, but you have to get looking for cheap stocks, because I don't have a whole lot of money and I can size up on cheap stocks. You have to get that out of your mind, because what happens if you're not used to trading 1,000 shares, before you know it, you could be down a couple $100. You could get in a stock and it can go against you 20 or 30 cents, and you're down $200 or $300 just that quick. Whereas if you are only trading 100 shares, then if you got down 20 or 30 cents, you'd only be down $20 or $30. And while you're learning and you're developing your system and you're learning when to trade and when not to trade and how to manage your trades, trading small is going to keep more money in your account, because you could stop out 2 or 3 times and have one winner and still end up green on the day. But the key is finding those that give you the best opportunity. And you want to look for stocks that have the huge potential. So let's look at this morning. Let's look at some of the stocks on our watch list this morning, and I'll show you what I'm talking about here. Okay, RARE was one of the stocks on our watch list. So what I'm doing is, once I locate the pivot points on the chart that's going to serve as, support or resistance intraday, once I locate these, I look for windows of opportunity. Because if you have a stock that can trade, in an open range where there's no support or resistance, you have a better chance of the stock completing the whole move. Now, if you're in a stock like, see, which was another one this morning? Was it AEO? Nah. Alright, like Cree. When Cree was this one had the big one. It wasn't Cree. I'm trying to think of the one that from this morning. I'm trying to remember. Oh, okay, I know what it was. EXPR. Okay, EXPR didn't really have any range. You see, we had from 628 to 666 to 690 to 704. It just didn't have any range in it. And so if you're learning and you're just trading, and you're trying to trade with 100 to 300 shares, or let's say you're trading with 100 shares because you're just starting, and you try to trade something that only has like 20 or 30 cent range, well, you would have to top and bottom tick the move in order to make $30. And then the trade is probably going to cost you $10 to $12. So it doesn't really make any sense, and there's no way you can make money like that, because if you're winners, you're only making $15 or $20, but then when you lose 50, because 50 is your max loss. You're not going to make any money. So what you have to do is look for stocks that have the windows of opportunity that's going to give you the best and the largest moves. So let's look at the daily chart on this. On EXPR. See what it did today. Now, you see, once we broke out of the 5-minute opening range, we had about 25 cents here, and we had probably another 20 cents here, after this move. So trading this with small size wouldn't have made sense. Now, yeah, if you could have traded this with 1,000 shares or 2,000 shares, then absolutely. These small moves, can make you money. But when you're just starting and you're trying to grow your account, again, you got to find stocks that's going to give you, larger windows of opportunity. So if we look at RARE today. So look at the windows here. Now this stock didn't move. It didn't open up like it should have. But look at the windows of opportunity that it had. It just didn't get the volume to move it. But between 51 and 54, between 51 and 49, trading 100 shares on this, and if you would have gotten the whole move, that's $100 or $200. So these are the stocks that you want to try to find. But definitely, if they don't have volume, you don't trade them. And that's the mistake I made on this trade today. Was I was trading this, and there wasn't any volume on it. Just because the trade yesterday that has some volume, I made a couple $100 on. I'm going to take this with no volume. And you're not going to get the same move you got yesterday. And that's what happened. So even though we have the range, we got to make sure that we trade a stock that has volume. Now this stock that hit the scans earlier today, Pets, this thing had big range in it. And with 100 shares, if you got the reversal with 100 shares off of this, if you got in at 33, the 9 is all the way up here at 34.50. So you had $1.50 range on this. So this was easy to take 100 shares and just take it all off at the 9 up here, and you got $150 trade on 100 shares versus a $15 trade if you were trading a $5 or $6 stock that's only moving 20 or 30 cents. And that's one of the hardest points or hardest things I try to get through to some of the traders that I work with, because they don't want to take a $50 or $60 or $70 stock because of how much it costs. But if you can just get 100 shares of it, you're going to get the moves. I want to see a minimum. Now, I have a rule that the minimum volume I want to see per 5-minute candle is 50,000 shares. When the market is good, it's 100,000. But when the market is the way it is now, 50,000 shares per 5-minute candle is good for me. But when you trade, when I got in a stock like this, and we start trading 29 6 this 5 minutes we only traded 6,300 shares. The next one about 1,350, and then we had a big pop up here, but it was still under 50,000 shares. And when that happens, you usually have a pretty big spread, and the stock trades pretty jumpy. So it's easier for you to get stopped out if you're trying to manage your risk. So finding a stock that has real good volume, typically you're going to have a decent spread between the bid and the ask, and you're not going to have a stock that's going to jump around a lot. I mean, that there are always exceptions to the rules. There's no absolutes in trading, other than if you don't have a plan and you don't have a strategy, you will absolutely lose all your money. That's probably the one absolute in trading. Is that if you don't really know and understand what you're doing, you will absolutely lose all your money. And so, I know it's not a good marketing thing to tell people that how hard it is to learn how to trade, how hard it is to make a profit, just to make $50 a day. How many of you guys have been trading for a while and you can't average, to be green $50 a day? It's not easy. And trying to make it out to sell a whole bunch of stuff doesn't make any sense to me. Because eventually you're going to be found out that it's not what you say it is. And you do have to, trade a different way. So it's very difficult, to get people excited and, and all of that. But the truth is, if you want to learn how to trade, if you want to grow and you want to develop, you have to learn. You have to learn, go through the process of learning. Because most of us don't have the money to just keep giving the market till we learn how to trade. And then only 1 out of 10 people that do that is going to figure it out. And most of the time they figure it out, because somebody in the know told them. Omar, what I would do is I would trade until I'm comfortable and I'm consistently profitable on my trades with 100 shares. And then you could go to 200 shares. And you want to trade 200 shares for several weeks or a month. And, then you want to step it up to 300 shares. Because what you have to do, not only to be comfortable with that increasing your exposure to the market, but you have to have a good enough skill so that you don't get in these trades that's going to stop you out as soon as you get in. That can happen, but you don't want it to happen every time you take a trade. If every time you take a trade, you get stopped out because you're trying to manage your risk and you're not willing to give it any more room because of your position size, then you shouldn't be in that trade. So because whenever you increase your position size, you're going to have to increase your max loss, how much you're willing to risk on a trade. Because how much you make is going to double. You're going to have to increase how much you're willing to risk, or else you'll get stopped out every time. Yeah, if you decrease your position size, like with 100 shares, and you're willing to lose $50 per trade, then you can give it 50 cents. You can give it a 50-cent stop, a max loss stop of 50 cents. So that if you're wrong or you really get messed up and the stock pops and runs from you, the most you're going to lose is $50. Now that's your max loss stop. That's not your technical stop that you're basing the trade off of, because you still want to maintain some control. Like I said, you want to be in control of your trade. You don't want it to be so automated that you're disconnected from what's happening. But you do have to have a max loss stop so that protects you from losing more of your account than you're willing to lose on a trade. But you have to be comfortable trading with whatever position size you're trading with first. You have to be comfortable with it before you start trading a larger position size. And that's why I always say, if you can't make $50 a day, there's no way you're going to make $500 a day just by adding more money to your account and increasing your position size. All that's going to do is help you lose more money. So you definitely, want to keep that in mind when you're looking at increasing your position size. You see, when I'm looking for my trades, there are a lot of trades that have 30, 40, sometimes 50-cent potential moves in them that I don't take because it doesn't make sense for me if I'm trading a smaller size. Now, on occasion, you've seen me trade with larger size and a smaller move. I try not to do that too often because that's not what I'm wanting to model. What I'm wanting to model is the fact that you can grow your account. You can make money trading smaller size and risking very little of your capital. And then by the time you build your capital up, before you know it, you would have developed your skill. You would be ungodly consistent, and you don't need anybody. You can make your own watch list. You don't have to compare it to mine or somebody else is in another room. You have your own watch list. You're comfortable and confident in what you're doing. And that is the process. But it's very difficult because, we live in an instant world. We want instant results. If you pay somebody, $3,000, $4,000 for a day trading class, when you go through the class, you want to be making money. You want to be making money. But that's not the reality. That is far from the reality. So you have to grow, slow. You have to start small. You have to develop your skill. Anybody, if you ask them, anybody will tell you that they went through the ringer before they started making money. Even though they may not advertise it, in the end they'll tell you, well, look, I had to go through all of this. It takes time. I wish, I'm saying today, I wish I could just sit on my hands sometimes and not take trades that I know are too risky and that probably won't work because the market is not in your favor. But I do it anyway. I did it today. Oh, I don't have my platform up anymore. But, on LOW, I took a trade before we even got through the opening range breakdown. I just got in. I mean, why? If I was trading an opening range breakdown, this is where I would get in. All the way over here. And I would have made a couple of dollars on it. Not getting in over here when we haven't even gotten out of the range. Number one, when the stock opens with this candle, that's a sign for me to take eyes off. That this isn't going to work. This is too much manipulation going on here. I mean, and you can see how choppy and crazy this thing was. You know, the first 30 minutes. And I knew that. In my mind, I knew that I should not even touch this thing. But guess what? I did. And I got stopped out. You know, thankfully, I had my max loss stop in place so that, you know, I won't lose anything. You know, and then I take this trade that I know I shouldn't be taking because look at the volume. The volume is so low on this. It's just going to get worse. You know, we couldn't even get over 100,000 shares after the first candle of the day. No way I should be trading this. But I did. And these are the battles that we have to fight within ourselves every day. But if we have our management in place, if we're able to control, you know, master the moves that we put in place, then we're going to stay safe. You know, I'm still green on the week because I didn't blow up today and kill, you know, the little bit I made on Monday and what I made yesterday. And so tomorrow, I guarantee you, if the market is doing what it's doing today, I won't be trading anything because I learned my lesson already this week. Seems like it only takes a week for me to forget the lessons I learned. And that's something I need to work on, but you know, we have to work on ourselves. Yeah, Cree was awesome. And I know you heard me, you probably, if you were here this morning, you heard me, you know, say that this thing is ready, is setting up for 5-minute opening range breakout. Oops. Says it was setting up. But why didn't I take it? Because I was fooling around with a stupid stock that I shouldn't have been trading to start with. And because of that, I ended up missing a textbook move here. You know, once it settled, now yeah, I probably would have got in here because I would have used the body, you know, with the wick this tall. I probably would have used the body here. I'd have got in risking on VWAP. And, you know, I'm sitting here looking at it and saying the mistake I made today was I just made the wrong choice. I knew what was happening. You know, but I tried to make the market do what I wanted it to do. I tried to make low trade the way I wanted it to trade just by trading it. And which is stupid. You know, we can't do that. I wasn't looking at the chart. And I wasn't looking at, you know, if this thing was setting up right. I wasn't paying attention. And all I knew was this was the one I wanted to do. I wanted to trade because I felt it gave me the most potential. And I wasn't looking at the chart. And I missed a move like this. So yeah, we're all human, and we all make mistakes. And that's the reason why I like to stream my actual platform, so you can see if I do something wrong, if I make a mistake, you can see how I deal with it, how I handle it. When I get two stops and the market's not working, I shut it down. There's nothing wrong with that. I mean, yeah, I sat here and paper traded. I wrote down on a note card, where I would get in this stock and what my profit targets and stops would be. But I wasn't trading. And what that did was it helped me so that the next time the market looks the way it does, I know what to do. Which I already knew what to do to start with. It's just that it didn't click in my head this morning to do it. But it's what we have to do. But the key thing that I want you guys to remember today is you want to master your own moves. You want to get to the point where you're not relying on anything to help guide you. That you're learning, and you're learning how to do it yourself. Now, yeah, as long as you're in chat, you build your watch list, you compare it to ours, you compare it to others. But don't let that change what you already had planned for the day. Go through and execute your plan. And then go back at the end of the day when you do your reflection and say, okay, well, Ed had this on his watch list. Let's see what this stock did. And you go back and look and see what it did. And then from there, you're able to decide, okay, do I need to change some parameters or some procedures in how I pick my stocks? What do I need to do? But you only do that during the reflection phase. You don't do that in the middle of the day. Especially not when you're brand new. Now, when you're a seasoned professional trader and you've got some years under your belt, then you're able to do that. You can make changes on the fly. But right now, while you're trying to learn, I do not recommend trying to change things on the fly until you're really comfortable in your strategy and what you're doing. And also make sure you look for stocks that's going to give you enough room to make profit. Because if you don't, you're going to continue to get frustrated, and it's going to really drive you insane, because you may be winning trades, but you're not putting any money in the bank. It's all going to commissions and fees. So definitely keep that in mind. All right, so I'm going to stop the recording there. And if you guys have any questions, I will answer them now.